Hey everyone, welcome back to your weekly market outlook. This is for the 20th of January 2025. A lot to talk about. Let's take a look at the inflation number first from the US. Overall, I think it is as per consensus. It is under control. We do see the headline inflation went up from 2.7% to 2.9%. The core CPI, though, it was a little bit lower on the the year-on-year CPI, core CPI number. We actually saw 3.2 when the market is expecting it to be stable at 3.3%. So we actually have a softer inflation number, and I think this is a relief for the market at this point in time, because ever since the last FOMC cut last year, December 17th, 2025, we actually do see that sell-off in the market. We do see a little bit of a panic selling going on in the market, and overall the thought behind that was basically with the FOMC's cut, it takes them down 1% last year in terms of their interest rate cycle, and the thought of Trump putting on tariffs, it would actually cause goods produced in the US to go up. In terms of cost, that could actually push inflation up. The concern was if inflation this last week, if the inflation prints higher than 3%, it might be out of control, and we might actually be looking at the scenario where the FOMC, instead of looking for that one more rate cut in 2025, they might pause and start considering an interest rate hike to control inflation again. So I think overall, the data from last week, it was a huge relief from the market here before Trump's inauguration, which is basically going to be our next data for this week. On Monday, all day, that's going to be on Tuesday for you guys in Australia or Asia. That'll be Tuesday morning where Trump actually is inaugurated, and that would actually be the turning point. I think market is overall bullish on Trump becoming president again. But again, the risk here would actually be in his speech during inauguration day. If he starts mentioning that he's going to push crazy amount of tariffs, or try to cut down immigration drastically, then yeah, it could put a fear back into the market. We might see a continued sell-off there. But so coming into that inauguration day, I think everyone is bullish for it. In the long run, if Trump is president in the US, I think the market generally understands that yeah, he's pro-business, and that would actually eventually drive the market up even higher. But the short-term panic that he could create in terms of how he's going to implement the tariff, I think that would be the key thing to watch out for on Tuesday morning. In Asia, it'll be Monday in the US. So we do expect extreme volatility on Monday and Tuesday this week, and also on Friday. If we take a look at what we have there, we're not really focused on the manufacturing PMI numbers. No, I'm actually more focused on the Bank of Japan interest rate decision. We are expecting for the Bank of Japan to actually hike by 25 basis points. Whether or not they hike or not hike would have a significant impact into the market, especially if they do hike by 25 basis points to half a percentage point there in Japan. I think market is not fully priced in for this interest rate hike. So the concern here is that if they do hike, we might see a huge impact into the market, but we're just not quite sure in terms of how this is going to play out. What are they going to be saying? Are they going to hike and then that's it, or are they going to hike and then continue to plan that hike in 2025? We still don't know what Bank of Japan is doing, right? And also the other thing is they might not hike, and if they didn't hike by that 25 basis points, we might actually see another carry trade rally in the market. So either we do get that huge sell-off in the market, or we have that bounce off the current price level for the yen crosses. All right, let's take a look at it from a technical perspective. Aussie USD, it's stable. We got 61 base, 62 is basically where the market is going to open on Monday, and then 63 is going to be our upper resistance on the Aussie USD. But it is going to be traded within range of 61 cents to 63 cents. Obviously, either of those two events this week could cause a breakout or a breakdown on the Aussie USD. Obviously, the range is going to be 61 and 63. Same thing with the Euro USD. This one here even tighter. We have that resistance trend line, basically capping prices every single step it takes. All right. But if we take a look at the current positioning here, we did close the week below 1.03 last week. The current range that we have support at 1.02, and then we have resistance at 1.03. Again, I do expect Trump's inauguration to cause a breakout on the Euro USD here, especially if we're thinking about the US dollar that's likely going to be positive with Trump's inauguration. It could actually send the Euro USD below 1.02, and if that happens, then we are looking for a move towards parity on the Euro USD, potentially even this week. So yeah, just be concerned about that. But if we do manage to break above that resistance trend line, then we are probably in for a little bit of a technical correction. I'm not going to be saying a trend reversal because we still have to face 1.05 as our resistance. So it is, and that will still be below the Ishimoku cloud. So we're just basically looking for a little bit of a technical correction happening across all the currency majors here. All right, Pound USD is going to be a little bit tougher here. The conditions here in the UK is that the bond market is not healthy at all. It's not doing that great. All right, so it's putting a lot of pressure on the sterling, and also the inflation number from UK, it missed consensus by 0.1%. Market was expecting inflation to be at 2.6%, stable at 2.6%, but we actually saw a drop in inflation in the UK to 2.5%. You can see from the price action here that last week it came back and correct itself to 1.23, but not able to push any higher above 1.23. So that's still going to be our key resistance here on the sterling here. And in terms of support, last week's low was at 1.21. So this plays into our outlook last week that we do expect a huge range in the sterling, and we are still within that range there. Again, I expect a breakout to happen this week. I'm just not sure whether it's actually going to break up above 1.2350 or is it going to break down below 1.21. But 1.21 and 1.23 is basically going to be the range of breakouts that you want to be paying attention on the sterling this week. All right, lastly, dollar yen. You know, back to 155, 154.50. This one overshoots our support by about 1 yen, but it's all right. Overall, I think we have seen a healthy correction on the yen here. I do expect price on the dollar yen, especially on the dollar yen, to actually be traded inside 153 to 155 before the Bank of Japan's decision on Friday. But on that Friday, depending on the decision on the Bank of Japan there, we could see either a carry trade rally again. Buyers might come in at 153 to 155. If Bank of Japan does nothing, did not hike interest rate, then we would actually see buyers come into the market and will drive price to 160 immediately. All right, on the flip side, if price is traded around 155 and Bank of Japan does hike interest rate by 25 basis points, I expect price to cut straight below 152. We're expecting an immediate return to 149, 150 range on the dollar yen. Obviously, this is just on the dollar yen. The euro yen, sterling yen, all the yen crosses there is going to move in the same direction. We expect pretty much about 0.9 on the positive correlation across all yen crosses this week. All right, so this is going to be a huge event. Again, this is going to be extremely volatile. We're talking about 400 to 500 pips or 4 to 5 yen on the announcement, whether or not they hike or they do not hike, depending on the price positioning. But the ideal way to look at this is if this week price is stable inside 153 to 155, then we're going to be looking at the scenarios that I just mentioned earlier. All right, so with that, good luck to the trades for this week, and I'll see you soon.